The worst trade here we see is a perp. And so gotcha options are better than perps. This person lost almost $70,
Ooh.
38%. Yeah, so it's a steep slope down.
Yeah, there's no forgiveness. You're wrong, or I mean, you're right or wrong, but where you're wrong, every time the price move, you're wrong a lot more. And yeah, so the setup is that you buy a put options. This is bearish on its own. Normally, buying a put will be low risk if the price goes up, and you're wrong. It's only making money when it decreases. But you sell a call to make this symmetrical. It's going down all the way. The one advantage, I'd say, the one reason why you might want to do the perp instead of the put option is because it's light gray, but the net spread that you see here is negative, so they pay, but it's 0.095x. And if they did not have this short call to fund this, they would be paying 1.2. So 12 times is 10 times more, let's say, round number. It's a bit weird, but the perp, because it has a long and a short, because it's like lots of risk on both sides, you pay 1/10 of the cost, 1/10 the funding rate, than just a put option. And yes, they're paying, but it's actually quite negligible. They lost due to the price move, but not due to the fees. And again, whereas if they had a put, their losses could have been half as much, but then they would have paid 10 times more in fees. It would still be maybe $1 instead of 20 cents. But this is the trade-off. I would not say this is a bad trade, because in terms of perp funding rate regime, this is almost nothing. 0.09x, it could be like 5% per year in a weird way. So that's maybe the only reason I would advocate for trading perps. If you're used to perps and you're happy with the quite symmetrical risk, now you have a juicy premium. I don't know what the funding rate is, say on hyperliquid, but that one is its own funding rate. If you consider a trade, you could even have a positive. This is negative, but you could have a positive funding rate for shorts. Now it's negative for shorts as well, so it's a different way. But that would be maybe the main reason. Shorting on Panoptic gives you a tiny funding rate,